So let's go over the 3 trades that I took this week. First, we're going to talk about Euro AUD. We're going to look at the entry, why I took the risk, and how I managed the trade. You can see here on the P&L in at 155.28. Best exit was right here at 154.89. And then I get stopped in profit overnight at 155.26. 2 pips lower than my entry, 2 pips in profit. So the position happens here Wednesday morning. I take it short. I close some of it here at the horizontal green line, which is ADR. That's the average daily range level where it should typically move. I held a piece of the trade. I did not get stopped out as it pulled back, and I was able to get out here at 154.89. You can see price right here on the right side. I was able to get out here with my best exit. Then I held more overnight, and like I said, got stopped in profit here as it turns around and comes higher. This was the first position of the week. This comes after an A1 breakout formation right here that's boxed off. You had good TDI value. The issue was the bullish divergence. You can see I have it drawn with these black lines. That bullish divergence can act as support or tell me that change from the drop is coming. So you want to be aware that change could possibly happen. So I waited. I didn't just jump in the formation at 6:30. I went down to the 1 minute and got in at about 7:30 here. I'll show you on the 1 minute. As we were able to find a better risk level. It's always about knowing where my risk is. So let me go back. It's not synced up. Hold on. There it is. So here on the 1 minute, after the A1 formation presents, notice how the TDI holds the sell zone. So when I took my position as it comes off the 50 EMA here, I want to use this level as the most recent lower high. That's my stop, because if it breaks back above that structure point, I don't want the trade anymore. But it holds that structure point, holds the TDI in the sell zone, and ends up continuing the move into the end of the day. So that was using the A1 formation on the 15 minute, but then going down to the 1 minute and kind of using like what we teach for the D1 in there to find the risk. A1, D1 work very closely together, right? So that's how I was able to find the risk on Euro AUD. Then we come back on Thursday, and I find another A1 formation on GBPCAD. This candle formation, proper TDI value. Again, some people asking me about the right leg. The right leg of the formation is valid if it comes off the proper EMA, which is this is doing, and if the TDI value is proper. It doesn't need to break past all 4 of these candles and break for a new low of day. That would be an overextended candle. As long as it's coming off the right EMA with a proper TDI value on that candle close, that's where I'm going to look to take the position. I end up taking this trade about 45 minutes before news. So this big pin and pullback is news. This move ends up continuing into the end of the day, way through ADR, like 160 pips lower from my entry. But you can't be mad about that, can't be greedy and look for that. Instead, I managed it knowing that there was news coming in. I managed it and locked my stop loss very quickly. Notice the next 15-minute bar is bearish. That's a great sign after an A1 formation. So if you look at the P&L, I was in at 170.36. My best exit was 169.90. And then I was full out of the trade as the news started to come in, and it broke up to 1.7007. So you can see here, if I measure it like this from the entry, the stop was right here. It drops to that 169.89 level. Is that what I said? 169.90, yep, 169.89, right around there. So we'll put it right there. So as it pins down here, that's where I got my best exit, about 47 pips, so almost 5R from my entry, risking 10 to go get 50. That's great. Then as it starts to come back up, on the 1 minute, I'm watching it because it's news, and I know high-impact news can shake up the market. The high-impact news shakes it up. I close more of it here as news starts to kick in. You can see my notes there, and then it comes all the way back up towards my entry. It would stop me out if I hadn't done that. So that was the position on GBPCAD. Again, both EA and GCAD were A1 breakouts, both using the 15-minute and 1 minute together to manage the trade. But the entry comes from the 15-minute idea. If you don't get the 15-minute formation, you can't get in the position. It has to set up the A1, and then you can look to use the 1 minute to manage it. And then today on GBPCHF, my least probable setup of the week, we had bullish divergence create the idea yesterday. You can see the RSI rising, price falling. That sets the low. Overnight, we hold the low and come higher. We break the 50 EMA for the first time here. Second time we're really getting through the 50 is here as the London session starts, and we're making higher lows all night. That's what I really liked about it, is that structure was moving higher for the D2 idea to see it at least reverse to the 200 EMA, which is what it does right there. So I'm looking to trade it then from this 3-candle formation. Here's my notes. From this 3-candle formation up towards at least the 200 EMA. Now, it is a weak right leg, and that was one of the knocks. If you give it a second to read my notes, you can see one of the knocks I gave it was this weak right leg. So that took it from a B setup to a C setup. You also have this swapping liquid 50, which is another reason that it's a C setup. And I think the thing that I could have done better here was take full profit at the 200, because when it reached the 200 EMA here the first time, it didn't body it. It showed resistance. So coming to it again, it's a horizontal level. I'm not going to anticipate that that horizontal level is broken. I'm going to normally see it bounce and try to trade after, or get into the trade after. So since I'm trading up to a horizontal level, it's important to make sure you're taking profits there. Now, because it was a C setup, I locked my stop loss in profit, and that's why I got tapped out in profit on the rest of it here. Close that. You can see I was in at 33, out at 43, and then same position, in at 33, out at 34 as it pulls back down. So only about 1.5 R on this setup, just under 2 R at most. And then from where I got out, I was a little over 1 R on the trade. But that's what you'd expect from a C setup. You would not expect a C setup to look like this move on GCAD yesterday, where it just tanks. Look at the difference. Look at the perfect liquid 50 here, right? On GCAD, trading short in trend. Look at the liquid 50 here. We talked about this at the beginning of the stream. Quantifiably, where is this more than it's not? It's in the sell zone more than it's in the buy zone. So more than not, sellers are actually in control today. And I think that's why you're seeing this still make a move lower, because more of the day, the L50 is spent in the sell zone. EMAs are still overall in a downtrend. 800 EMA is all the way up here. So again, not a high probability setup, but I like that the 8 and 21 EMAs were crossed up. I like that on the 1 minute today. If you look at the 1 minute right here, on the 1 minute, from where that candle formation on the 15-minute closes, the L50 pulls into the buy zone and holds into the buy zone. Notice how where it stops me out in profit is actually when the L50 comes down into the sell zone on the 1 minute. And that's normally a sign when it comes out of the zone that you're trading that the trade is done, that the move is over. If this 1 minute L50 had held the buy zone, we would see this head up towards the 800 EMA. So that 1 minute liquid 50 on the TDI is very, very important. And that's the recap of the 3 trades that I took so far this week. Let me know if you guys have any questions here in the comments. I'm here to help you guys in any way that I can. What do you think about trading price channels? Is that a good strategy? No, not precise enough. Again, this is where I feel like most people are struggling with their trading. They don't have a precise system of rules to follow when they're taking their trades. They're drawing some diagonal lines, which are the least profitable lines that you can draw. Horizontal lines are much more significant. They're drawing diagonal lines or using a Fibonacci, and see it hit a level and they just take a trade. It's so not precise compared to what I do. It's way closer to gambling when you do it that way. If you're just trading support and resistance and you're still not having the success that you wanted, it's time to open up your mind and realize that you're just not being precise enough, and that trading support and resistance zones is literally like gambling, because most people don't even know the direction the trend is moving. They see it hit a zone and they take a trade in the opposite direction, trying to call a reversal. It's ridiculous. It is literally the closest thing to gambling that you can do, other than just throwing trades around. You think you're doing analysis when you trade with support and resistance, but you're not. It is so far from how precise you need to be. It's a joke.